So what's the big fuss about accounts payable, you may wonder? Isn't it just another accounting function? And one of the more simple ones at that? Let me answer that politely. Although if you know me well, you know what's going through my mind. Yes, it is part of the accounting function. And no, it is not simple. Get even one tiny part wrong and you could pay crooks, who do an incredibly good job, by the way, of making themselves look legitimate until they have your money. You could double pay an invoice or even triple pay at worst, and few vendors willingly return those duplicates or worse. Make sure you stick around until the end when we explain why, despite all the automation being thrown at the accounts payable function, the team still has more work than ever. And I'm willing to bet even the most knowledgeable controllers and accounting and finance professionals never considered some of these issues. So what's accounts payable all about? Getting the bills paid, but it's a lot more complicated than you might imagine. Now, some folks take the attitude, you get a bill, you pay a bill. So what's the big deal? Well, the big deal is if you take that approach, especially in today's environment, you could end up double or triple paying the same invoice. Why? Because about 25% of the vendors now send all invoices more than one time, which I'm already starting to allude to the problem about why accounts payable has more work despite automation. You could end up paying fraudulent invoices, and you could end up paying for things that you're not supposed to pay for, or you're not required to pay for, that the supplier is supposed to pay for. So, basic principle, a good invoice gets a good payment. But what's a good invoice and what's a good payment? I'm getting ahead of myself. Before an invoice can be paid, the supplier must be set up in the master vendor file. Some refer to it as the vendor master file, others just call it the vendor file, whatever. And this includes doing some upfront verification. They might include doing an OFAC check, running the data against the HR file. Some folks, especially if it's a large supplier, will do a credit check. And of course, everybody should be running information that they collected from the supplier, ideally on a W-9, regarding their taxpayer identification number against the IRS database using IRS TIN matching. Once the vendor is set up, then you're ready to accept invoices and process them for payment. When the invoice arrives in the accounts payable space, the first thing that needs to be done is sent out for approval. Once it is approved and returned to accounts payable, which does not always happen as quickly as I think it should happen, and many who work there, and sometimes they have to follow up, then it needs to be verified and scheduled for payment. And that too is an issue because today we're trying to get away from paper checks. But one more time, I'm getting myself. So how can you tell if the invoice is good? It's been approved. Shouldn't that be enough? No. Most people who approve invoices, most purchasing professionals, just sign off and say, yes, we bought this stuff. Yes, go ahead and pay for it. What they don't do is make sure that the invoice is accurate. And I have to tell you, oftentimes the invoice is not accurate. So then the accounts payable staff does a three-way match, the proverbial three-way match. I'll put a link to that in the description in case you're not overly familiar with that. And then if there's discrepancy, and often there is, they have to go about resolving that discrepancy, seeing where the problem is, and getting it fixed before they can go ahead and schedule it for payment. Once they've done that, they schedule it for payment. So what is a good payment? A good payment is one that's made when it's supposed to be made. It's not made early and it's not made late, and it is for the amount that you're supposed to pay. Now, in many organizations right now, we're going through a period, and we have been for a few years, and I expect it will continue for another few years, where we're trying to move away from paper checks, at least if you're a U.S. company, and start paying in either ACH or maybe with a P card. We want to get away from the paper checks because even though they don't look like it on the face of it, they are actually very expensive because they require a lot of manual efforts and it's very time consuming. So that's what makes up a good payment. The right amount to the right person, ideally using the right vehicle, and of course on time, not early, not late. And sometimes, by the way, suppliers will call up the accounts payable department and try and finagle with them and try and get them to make the payment early, but they have to stand firm. Now, you may think, okay, you made the payment, the work is done. But the work for the AP team is far from complete. There's a lot more things that they have to do to complete the process and a lot more things that have been thrown on their plate. So, for example, they have to follow up on uncashed checks, which, by the way, is a big advantage of using ACH because although checks don't get cashed, occasionally ACH transactions bounce, but when they do, it's almost immediate and it's much easier to follow up on that than it is to follow up on an uncashed check, which you don't know about for maybe 60 or 90 days. So it eliminates a lot of that. It also eliminates some unclaimed property reporting. On top of the check issue, there's also a lot of state reporting. And by the way, the amount of state reporting is just increasing. There's sales and use tax reporting that must be done. Now, sometimes this is done in accounts payable, sometimes it's done elsewhere, but it is frequently done in accounts payable, as is the unclaimed property reporting, and of course, the increasing amount of 1099 reporting. What do I mean about increasing amount? Well, some of the states now are starting to have their own 1099 reporting requirements, and they don't always agree with what the federal requirements are. And then there are some other specialized reporting that needs to be done. Sometimes this is industry related. Sometimes it is reporting required by the company. And as I alluded to earlier, there's now more work despite automation because the accounts payable team is being targeted by fraudsters in huge numbers, no matter what your organization is. And this means there are more verifications that are required, like those change of bank account email requests that are coming in. And this new verification work that must be done, unless you don't mind sending millions of dollars to a crook, is time consuming. It takes time. Somebody has to do it. And unfortunately, I don't see any accounts payable groups getting more staff for this. But there's more. That's not the end of the battle, if you will, or the end of the road. AP pulls specialized reports for others in growing numbers now. Controllers, CFOs are realizing that the accounts payable staff has access to data that others in the organization don't because of all the payments, and they're coming to accounts payable to get this data. Sometimes it's more than just getting the data. Sometimes the accounts payable team will actually work with these other individuals on a special project. Now, accounts payable also has been, as I've explained, or as I've mentioned, hopefully I've come across, has been subject to a lot of automation and a lot of new technology. And I would say almost for the last 20 years, it started maybe 20, 25 years ago, the development of automation tools that would make the accounts payable function easier. Now, in the beginning, that was very expensive and it was kind of a big company thing, but the price has come down and there are now tools out there for organizations of every size. But implementing these things, doesn't happen overnight. It takes a little bit of time and effort, and the accounts payable team has been working on them. These automation tools, by the way, don't as soon as you implement them, they don't immediately eliminate all the manual efforts in accounts payable. They help with it, but they don't eliminate it. And as we've discussed, there's been more work coming into the department. So I've just addressed the topic of why there's more work in accounts payable at a very superficial level. To understand fully what's going on, click on the link that has appeared on your YouTube screen and is in the description. It will help explain why accounts payable is getting harder rather than easier. Good luck.